I found three assets that I regard to be as one of the safest investments. I'm going to tell you what they are and give you the pros and cons of each. Welcome to Finish First Financially, a channel dedicated to helping millennials and Gen Z to get out of debt and build savings. I'm Goran Radanovic. All of us need a place to live. We might not necessarily need to own a business. Some of us don't even need to have jobs, but all of us need a roof over our heads. And that's one of the reasons that real estate will always be high in demand. The real estate that I really value is an apartment that I can rent out to generate an income, especially if it's in a good location and I can rent it out on a daily basis, as opposed to having one tenant for the entire month. That's going to provide me a much bigger income. Now, residential property, I don't really regard to be that big of an asset. And that's because there are running costs involved in order for me to stay on that property. Now, if I'm renting out a room or the cottage next to my house, well, then that's a different story. That's partial residential, partial rental. But if I'm just living there, that's a residential property that's incurring me expenses. And even though throughout the years it's most likely to gain value, one day when I decide to sell it, the actual profit that I'm going to get isn't the selling price minus the buying price. I need to factor all of the expenses such as electricity, water, rates and taxes, repairs on top of that buying price in order to get the true profit, because those are the actual expenses that I've incurred in order to get to the point where I'm able to sell the place. The ideal situation that I want to be in if I own rental property and residential property is for the rental property to make me a high enough income to fund all of my residential property expenses. And that's possible if I'm letting out the residential property on a daily basis as opposed to renting out on a monthly basis. It makes me a bigger income so that I can enjoy my residential property without having to put up money from my own pocket to live there. One of the things that you have to consider when you've got residential property and a tenant is that you're likely to incur repairs and maintenance costs more often than if you were to live in that property. You've got a tenant in there who doesn't care about your place as much as you do, so they're likely to cause more damage often. And eventually they may even decide to stop paying you. Then you have to go through the whole eviction process. And even if you delegate that job to a rental agency, you could have problems with them. They could pay you late or just decide to stop paying you at all. So there are those headaches that one needs to consider with rental property. But generally speaking, when I look at all the advantages of having rental property and all the headaches that come along with it, for me, it makes sense to have rental property to generate that income. I've always been fascinated with financial markets. I studied finance, I worked in finance, and I always wanted to know, how do I make a passive income from financial markets? So I looked into Forex, I looked into cryptocurrency, and I just saw that those were risky investments and not really suitable for beginners. And also they weren't really a long-term solution, I didn't feel. But I found that solution in the stock market. And the first thing that a beginner investor will ask with regards to the stock market is, what stocks should I invest in? And I think that's the wrong mentality to come into this with, because you don't know how to read charts, you have limited knowledge about what to look for in a stock, and you might not have the time. I found that the S&P 500 is one of the safest stock investments. And that's an index that tracks the stock performance of the 500 biggest companies listed on the United States exchanges. Now, because it's an index, you can't invest directly in it. So the way to go about it is through a broker that offers an exchange traded fund, an ETF, that tracks the performance of the S&P 500. One important factor that beginner investors always overlook is the expenses associated with managing that account. It's important to look at the reputation of the broker, the average annual returns that they provide, but always look at the expenses that come along with managing this fund. And in an ETF, they're called an expense ratio. Now, the S&P 500 usually provides returns of 10% annually. That's the average. Now, if you've got high fees, that could significantly lower your returns. So watch out for that. And another thing that beginner investors always ask is, well, if I invest in the S&P 500, then what about the individual stocks that have gone up 100% in a year? Yeah, sure. There's that possibility that you could miss out on that. But there's also the possibility that that individual stock could go to zero. Now, the chances of those 500 companies that the S&P is tracking all going bankrupt and your investment going to zero, that's highly unlikely. It's possible, but the chances of that are very small. That's less of a risk than investing in an individual stock. That's what I think. One of the biggest investments I feel that I could make is in myself. When I became homeless and I was $40,000 in debt, the best thing that ever happened to me was admitting to myself that I was the reason for being in that situation. I'd made several consecutive financial mistakes over a period of years that eventually led to me being on the street. And I thought, well, since that's the case, I'm responsible for my failure, then I can also be responsible for my success. And instead of being a know-it-all, I became a learn-it-all, because I heard a wise rich man say, if you want to solve all your problems, you have to learn. And that's exactly what I did. I started reading books about how to manage money. I started watching videos about how rich people conducted themselves and what they did so that I could replicate their actions and hopefully have the same results as them. Then I also took up public speaking classes to improve my confidence so that I could communicate better. I started going out into public and just walking up to random people to make friends, to find a lover, to build a network. I started reading books to have more knowledge, because once I had that knowledge and experience, I applied it and I had better results. One of the problems that people encounter when they're investing in themselves is that they feel the need to know more and more before they eventually one day take action. They're just constantly consuming all this knowledge, but they never take the necessary steps to open up that business. They've got all the knowledge to, but they never pull the trigger because they're scared, or there might be other things that are keeping them back. But knowledge is only powerful if you take the necessary actions to get to your destination. So those are the three biggest investments I feel that I can make. And if you'd like to reduce your expenses and you need help with managing your debt and increasing your income, then contact me on finishfirstfinancially@gmail.com. The information will be available in the description box below. Get in touch with me. Let's have you on the show so that we can get you on the road to financial freedom ASAP.